Welcome back here with Money, Money, Money. And this week, I'm in conversation with HRISHIKEsh PARANDEKAR of Ambit. And he's helping us understand the sort of changes that might be required to your portfolio given the demonetization impact. So I'm going to talk to you about the most exciting aspect of all this, real estate.
Sure.
From a home buyer's point of view, I mean, people are super excited out there, wondering if they'll get their dream home and when the prices will come down or not. But what about as an investment class, asset class?
So again, the two ways to think about real estate. One is investment properties into residential, so we had seen a slew of money go into real estate and gold into properties from 2009 till 2014, and that's been reversed over the last 2 years. I think that is a very poor investment idea. I would advise everybody to stay away from investing in individual properties for investment purposes. Okay. Residential particularly. Yeah. Commercial is a different story, but we will not touch that. But residential is particularly what I'm talking about. The yields continue to be low. They might inch up a little bit, but they have continued to be low for a very long time across.
Are you expecting a big crack, a big crash, so to speak, that people are talking about?
No, I'm not. Right?
Okay.
Again, that answer has to be nuanced in terms of saying there are different segments within that. The significantly higher end premium price things, and that means basically anything about a few crores, even in Mumbai, is premium in my mind, right? Has already seen a significant decline in demand, and that will see an even more decline in demand. Okay. For all the reasons, including sort of sucking out of the black money, right? I think the secondary market gets hit across the spectrum. Right, because that has always been kind of dependent on doing trades in a mixed fashion, and that gets hit across the segment. I think what does not get affected, probably gets a much bigger fillip, is the whole sort of mid-segment residential housing, as well as what is kind of loosely called the affordable housing segment. Right. There, I think the prices have already corrected. If you actually go try to do trades, what I think is a big fillip there is that as home loan rates come down, right, and which our expectations are, could be fairly significant home loan reductions, it's probably the lowest that is likely to be in the history of mortgages in India, right? History of mortgages is about 30-35 years, right? Yeah. And so we probably will see great home loan rates, and that I'm hoping will actually drive a lot of demand, because there is certainly a sort of housing shortage in the sense of, there's a great demand which is not being met. Now the challenge has been to be able to get it at the right price point with the right sort of installments in effect, right? And so I'm actually, so apart from sort of this, we get very tainted by looking around what's around us, right? And so sort of Mumbai city, yes, it'll be difficult. NCR, it'll be difficult, the premium pricing. But I think otherwise, we generally, I think it's going to be great.
Okay. What about the investments in that case?
So coming back to that, so investments, as an investment property, I would not invest in that, right? I think end users will invest in that. The way to play real estate in my mind actually is to be able to participate through real estate funds, real estate equity funds, which are investing in real estate projects. And so as an investor, I would much rather want to invest in the things I talked about, mid-segment housing, affordable housing, and participate in the equity in that. Again, for the last 5-7 years, there's been a lot of sort of high yield debt being sort of, created as product for investment. That I think will change as well, because yields will come down. Okay. And so I think the way to play this is to be able to play it in an equity sense.
So it's real estate equity funds, give us your sense on whatever's available already in the market out there. How do you rate these funds? What kind of typical returns have they given, and what returns would you expect if someone wants to invest in this environment?
So this is where the sort of the problem is, right? Because real estate equity funds were the flavor of the season in the 06 to 08 period, and they have done fairly badly. Yeah. Right? And so the investors have had poor memories of sort of the investments in real estate equity funds. I think the newer generation funds that are starting to come about will actually target 20 to 25% IRR returns, right?
Target is fine. Do you think they'll be able to deliver that? That sounds like a fantastic number.
It depends to be seen. It remains to be seen how actually each fund does, each manager does. But I think I can very clearly see a case for how that comes about, right? In terms of being able to partner with decent quality developers, trying to meet sort of good product for the good price, and focused on sales as opposed to sort of either selling it to investors or hoarding inventory or any of that stuff, right? We went through a bad period when sort of the greed of developers overshot everything that existed. And that's when I think all the returns from real estate equity got significantly hampered. I do believe 20 to 25% returns from real estate equity is very possible.
Okay. So finally, coming down to some last thoughts, and we can't end this without talking about gold, a favorite Indian investment for a lot of households, of course. Your views on that, and in case for at least the HNI clients out there, whether you are advising any kind of geographical diversification, should someone be buying assets which are non-India in nature?
Yeah, so I think, I mean, certainly we are entering a phase, or have already entered a phase of strong dollar, right? We will see a situation where, because the interest rate differentials also come down, US yields are going up, Indian yields are coming down, we will see a relatively benign period. I'm being a little bit brave here, trying to go out there and say we'll see a benign period in the INR, and perhaps I'll be horribly wrong. But I think we will see a phase where we will see some amount of sort of stability in the dollar-rupee thing. But having said that, because of the dollar strength, I would certainly always advise to move some money away from purely INR assets to also put basically USD assets. In that context, what it does for gold, in my view, is if you believe the strong dollar theory, then I would argue that gold actually is a representation of a non-dollar play. It's a play against dollar.
It's inverse.
It's
Typically,
inverse.
it's supposed to move inverse.
Exactly.
Yeah.
So if you believe the strong dollar theory, which I do, I would say gold is basically going to remain flat or worsen.
Okay.
So I would not sort of put money into gold.
Okay. Then how do you play dollar assets? What sort of dollar assets do you buy?
Firstly, currency diversification is a good thing to do. Beyond that, what I would do is I would spread across two things and not do the popular thing, which is to go and buy properties and trophy properties in the sort of big cities, right?
Yeah.
I would do some equities, global equities, and US equities. I mean, the demise of US equities has been talked about for a while, and we continue to see some new highs, right? So I would do a piece of that, global equities, which is preponderantly sort of in US, and I would do some combination of sort of play the increasing yields in a sort of US debt sort of way. So I would do those two things is what I would do.
So Rishi, to sum all of this up, let's come back to the pie. So if you're looking at a medium risk investor in, bordering the HNI variety, the asset class mix, break down that pie for us.
So I would say up the equities. Besides the short-term opportunity to trade in fixed income, reduce the fixed income exposure, start to nibble away at absolute returns if you aren't already doing it, and take some dollar exposure, along with my favorite real estate equity piece. That's
a very interesting note to end on. Thank you so much. It's been a pleasure talking to you, and I'm sure this would have been very helpful to all the Money viewers.
Thanks very much.
Thank you very much. Well, that's where we take your leave this week, but we'll see you with more conversations next week, so keep it with us.